Would you like to invest your money where you never experience any downside market risk? Would you like a program that allows you to invest and save money where you are guaranteed to never lose your principal investment? Would you also like that program to lock in all gains achieved and also never lose any of your gains regardless of poor market conditions? Would you also like the program to guarantee a minimum rate of return? These programs are known as Index Universal Life Insurances and Fixed Indexed Annuities. The crediting method used in these programs is the annual reset crediting method. Imagine not having to worry about losing any of your money. The safe way to invest in your future is to use the annual reset crediting method. Watch the following and find out how this crediting method will allow your money to grow without any risk to the amount you invest. The following chart shows an example of how the safe money annual reset crediting method can benefit you and your future plans, with the actual results for a 14-year period starting January the 2nd, 1999 through December the 31st, 2012. Let's see how the annual reset crediting method works in an IUL to your advantage by tracking the actual performance of two plans. One of our top providers has an IUL program that has a 140% participation rate of the S&P 500 index with annual caps. The S&P 500 is the composite average value of 500 stocks, where the Dow Jones is the composite average of just 30 stocks. Therefore, the S&P 500 provides a more stable platform to base your retirement on. Let's watch the actual cash growth in both accounts over a 14-year period when both accounts start with a $10,000 investment starting in January of 1999. I'll let green represent the internal growth rate of the IUL's cash account value, and red will represent the S&P 500 index account value. Starting with a $10,000 lump sum investment in each account, let's see how the IUL's cash account value performed when compared to the performance of the S&P 500 index account. At the end of the first year, 1999, the value of the S&P rose 21.11%. The value of the IUL's cash account rose 10%. Right about now, you probably feel cheated. The S&P rose 21.11%, but only 10% was credited to the IUL's cash account. This is because in 1999, there was a 10% growth cap on the IUL's cash account as indicated at the top of the chart for each year. But before you completely write off an IUL's, let's look at the performance of the IUL's cash account when compared to the value of the S&P 500 account over the next several years. Over the next 3 years, the S&P 500 had a negative downward slide due to the dot-com crash, resulting with a total loss of 43.36% over the 3 years. The value of the cash account in the IUL remained unchanged. The way an annual reset crediting method works is the value will never go down. The value can only go up or sideways, but never down. While the money invested in the S&P 500 went down 43.36% over 3 years, the money in the IUL's cash account remained unchanged. This resulted with the IUL's cash account having $3,469 more than the S&P 500. Over the next 5 years, the U.S. economy was robust and the S&P 500's value increased each year, and the value of the IUL's cash account also increased. In 2008, the U.S. economy experienced a subprime crash, and the value of the S&P 500 dropped 37.42%. For the same year, the annual reset crediting method prevented the value of the IUL's cash account from decreasing. The value of the IUL's cash account remained unchanged. Over the next 4 years, the U.S. economy again was robust, but it wasn't until year 2012 before the S&P 500 value gained back all it had lost in 2008, 4 years earlier. The increased value of the IUL's cash account also increased during these same 4 years. The S&P 500's index ending value was $14,779 after 14 years, resulting with an average of 3.41% per year growth. The IUL's cash account ending value was $23,294 after the same 14 years, resulting with an average of 9.49% growth per year. In a tax-qualified account such as an IRA, 401ks, 403bs, 425s, and etc., the money would be subject to ordinary income taxes when taken at retirement and result with the $14,779 being reduced to $10,345 after taxes. Money in an IUL can be taken without having to pay income taxes per IRS tax codes. Therefore, you have $12,949 more money in your pockets at retirement. What if you were scheduled to retire in the year 2001, 2002, 2003, or 2008? You would be retiring on less money than the amount you had invested in January of 1999 had you invested in the market. Had you invested your $10,000 in an IUL, you would have had a profit during the 4 years above. For the 14 years illustrated, your investment of $10,000 would have more than doubled in the IUL. With the annual reset crediting method, you enjoy all the growth of the market, but you are never in the market. You participate in all the increases of the market, but never experience any of the decreases in the market. Zero becomes your hero. Don't let this picture become the picture of your retirement. Your retirement picture should be like the peaceful tranquility of the sunset above. Call and we can show you how these programs can benefit you and your family.